And a very good morning to everyone, and welcome to the TriggerCharts pre-market rundown for Friday, September 25th, 2020. I hope you're all having a great day, a great week, and everything is going well for you. Your trading has been good, and you've had some good opportunity to make some money. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and we're going to take you through a variety of different discussions today with regard to some things. But remember that these are all for educational purposes only. Past performance is no guarantee of future results. And of course, with investing, a loss of original capital could occur. So remember, we are talking about investing here. So again, this is for educational purposes only. The other thing that we do in the mornings on Friday is look at a variety of different stocks that are trending, some of the things that are setting up that are very interesting. You have the opportunity as well, not only to learn about what we're talking about with our market profile and our auction market theory and our volume at price and all the momentum indicators that we look at through this lens this morning, but also what stocks that you want us to look at to kind of get an indication of what's happening. So with that, put your, throughout the morning, if you'd like, in the chat right over here. I'm going to top it right there here. Put some of the names. I see a few people have put some names in there as well. I'll also mention to you that the full suite of indicators for TriggerCharts available on the TradeStation trading app platform are available. Many of them, well, all of them actually, are on a 10-day free trial. So if you want to check that out, please go ahead and do so. And I put the link in the chat for you right now. All right, so let's get on to what's talking about and what's happening right now. I want you to notice, first of all, that in the right-hand pane, you'll see the chart of silver. This is the silver ETF. SLV is the symbol. And I think what is most interesting about this is that we're seeing that we saw that incredible move in July up from 17 to 27. That was a glorious move for the metals as we saw that the dollar was coming down, but also kind of a thought that there would be a revival in the overall post-pandemic trade, getting back maybe to some industrial uses for silver, not only the name as a precious metal. Gold also had a very similar move, but I want to show you something. This is an area of concern of mine. When I start to see that gold and silver are not participating, well, I'll say properly, anything can happen, of course, but they're really going down pretty hard. I mean, we went from, in the beginning of August, right about the area of 27 to where we are today, which is, all the way down, we kind of 27 top, 21. That's a $6 move. That's close to about, what, 20% or maybe 18% of a drop on silver throughout this time. That's very significant. One of the things you do notice is we had that really nice call on a long all the way down here. This is on a daily chart. On a 17, got in and out of it, moved in and out all the way up through about 22, some spikiness and kind of craziness. Then it got a confirmed short signal at 24 after a period of consolidation. A lot of circles there. But what's concerning to me is this. What's concerning to me is that it is moving along with the markets. And what that tells me is, if you remember, we saw a very similar situation to this back in the sell-off in March, where things were just being sold off at will. Everything sold off. Bonds, stocks, materials, or precious metals, commodities, real estate, everything sold off. There was no place to hide except for cash. So what we're seeing right now is a very similar situation where selling is happening across the board once again. Part of that could be due to the jitters associated with the election. Maybe the fact that we're seeing some things happening in the world, which we'll get to in a moment. There's a lot of really interesting anecdotes that can be and trending patterns that you could think about when this is happening, but it's not necessarily a good pattern. If you don't see that there are correlation or uncorrelated assets in a market condition, you have to wonder if there's either forced selling going on or if it's a bigger situation overall that's happening. I mean, we're going on more than 4 weeks of downstroke now from the from the high that we saw at the end of July. I mean, August has been just gnarly, and taking down some of the biggest names, the go-to names. Something's not quite right in the markets. And I want to tell you one other thing. This week we saw from a broker that they're increasing margin requirements into the election, noting that volatility could pose a problem. Now, when that happens, That means that people that are on margin or leverage, I should really say, are going to have to pull back on their exposure. That could create some forced selling in the environment. Of course, silver, just to get back to this for 1 second, we are also seeing that we saw a pretty significant spike since Jerome Powell made his commentary at the FOMC meeting recently, where he talked about that we're going to have a low interest rate environment through 2023, but didn't do anything with quantitative easing. What happened was the dollar started spiking. Very interesting situation there. So where are we right now? Let's take a look from a very low level from earlier this morning. We got the futures on the Dow down 85. We have the ES down 5. And we have the Qs once again ripping higher, prepping for the morning Pavlovian response at the bell to move higher. Again, we're trying to rescue a good week towards the end of the month because we're getting into the end of the month and end of the quarter, which is usually a time that we do see some window dressing. So right now, from a low, I think the Dow futures were down over 225 or 230 earlier this morning, ripping higher pretty well right now on maybe the durable goods number or maybe just a trade into the end of the month, which is happening next week. So the market definitely has a change of complexion. I mean, I think that we are all, agreeing to that. We're seeing this change of complexion with the market, that rips have been sold, dips keep on dipping. And we saw a break of important support levels. And that's important to recognize. This break of important support levels, when I look at that, when we see, for example, on the right-hand chart here, where we kind of broke this level right here, that was a real problem because that was being supported for about a month and a half or so on a daily chart. And then all of a sudden, it's actually going back to August. So we're talking about, almost 2 months back. And then it just broke and just all hell broke loose, obviously, on the fall for this. Down another dollar to 28 cents or 1.3% today on that. So pretty significant. Uncertainty is definitely rising. We saw the VIX start to move up, not terribly much, but enough to say that, hey, you know what? We're still in an environment that the expectations over the next 30 days are for significant volatility. And when we have comments from the president saying that there won't be, or he doesn't support a peaceful transfer of power, and just some of the things that are going on out there from both sides of the parties right now, with the Democrats coming in again with a $2.2 trillion bill, which doesn't seem that they're going to make any impact or significant impact with or headway with the Republicans. You have to wonder, what are they trying to do here? And is it all a giant sea of political, just waves that are going to be coming over us over the next couple of months? The election fears. I mean, again, I mentioned that brokers are increasing their margin requirements, and the polls and the peaceful change of command in question. COVID news has also been hitting the tape, and that's been something that's a big concern. We see that France had the highest level, as well as Britain yesterday, highest level of daily cases. Now, we can argue all day long if we want to look at that as something that's important or not. We can say, well, people aren't getting as sick right now. Death rate is down. Well, yes, that is true. Israel on a 3-week lockdown. The fact of the matter, though, is I don't really care, what we want to make of this right now, because it's really not up to us to decide this. Whether these countries do economic lockdowns is really the issue that we need to be concerned about. And already we're seeing this 3-week lockdown that's going on the second week in Israel. France is talking about that, and the UK and France have also cut back the times for bars, pubs, restaurants to be open, and certain high-risk areas are being shut down even further. And in the UK, Boris Johnson said, hey, you know what? We are going to ask you and urge you to work from home. So that is kind of hitting the tape right now, and that's a bit of a concern on what's happening there. So with that, we also have to look at some of the things that are happening. Banks and financials are weak. In fact, I think the European 600 banking index, banking and financial index, hit an all-time low today. Now, some of that is deserved. I mean, you look at banks like Deutsche Bank and Credit Suisse, the shenanigans they pulled over the years, and their charts. There's nothing to look at there. It's not a pretty sight. But we're having some problems here as well. JP Morgan embroiled with the same situation with this highly suspicious money transactions that have happened. So that really had to hit the markets as well. One of the things I think you really have to understand, this is a market dynamic discussion right now that really I think is important. And that is this, that every institution, hedge fund manager, generally speaking, um, the people that follow the trend and people that are, I guess, conformists with the market theory that you want to be long, that concept, they love the banks, and for good reason. I mean, look at Warren Buffett, the money that he made over the years in the banks. So, well, the reason is they're cash cows. Basically, if they fail, well, they're revived. There's always a government bailout. The money lending usually is very easy for them, and they can just lend, and then they have recourse to get the money back. There's a lot of good things to say about the banks in general. However, in the current environment that we're in right now, aside from the things that they pulled, the recent suspicious money transactions and all that, the environment that we're in right now does not lend itself really to benefit the banks. The low interest rate environment, the yield curve that is not steep, it's very flat. It's a really big problem, because if you look at what that means is that essentially, if they were a toy company, the materials that they're taking in and the materials that the finished product they're selling are all at the same price. Therefore, there's really not a lot of margin. So when you have the short end and the long end of the curve that are really not that far away from each other from an interest rate standpoint, where you can go out right now, listen, if you haven't done so already, there's 15-year mortgages out there at 2.25%. Why not get that? I mean, that's a great deal right now. And if you haven't done so yet, listen, you need to go do that immediately. So economics, we have one of the bright spots in the economy, by the way, is the home numbers, the new home sales, the existing home sales. And again, that's just tacking on to the idea of you can get a 15-year mortgage at 2.25%, and people are continuing with their deurbanization. In fact, the numbers that we saw yesterday on new home sales are the best we've seen in, I think it's 15 years. Our initial claims on a weekly basis still hovering above 800,000. And I think I wrote that twice for some reason. I'm not sure why. But next week, economics, we have a big week. We have consumer confidence on Tuesday, the Case-Shiller home price index, third reading of GDP, personal income and spending, the ISM manufacturing number, non-farm payrolls. So that's all important. I want to read a couple of things before we get into the stocks to watch, which is Workhorse and SPI. That one's great. I want to show you that. Nikola, RAD, EXAS, W. We have all these. So a couple of things that people just wrote here. Let's see. We have from James. He says, hey, from Vegas, just purchased the full package and the Aileron 360 and the Commander Series. Absolutely love it. James, thank you. And Nick, this is great. Everybody can comment today. Hey, you know what? Let's make this a feel-good day, okay? Nick's commenting. Thanks for doing this webinars. I left a review for Commander Series, the latest review on the customer reviews from Nick. So that's great information to see there. I appreciate that. And we got a bunch of symbols. We're going to go over to, before we do that, I want to show you this. This is the key reversal indicator. This, again, I tell you what this is. I look at this every day, three times a day, kind of like the morning before the markets open, see where we were, where it's trending for the day, and I look at it also at the end of the day where it closes. And the reason is we created this algorithm inside of TradeStation to really do one thing and one thing, which I think it does very well, which is tells us where there's some severe overbought and oversold levels. It's very easy to read. I'm one of these guys that's really big into let me just see it graphically, and let me see it with colors. This way I can quickly just take a quick shot of this and identify what's going on. What I identify here is I could just look very easily right over to the right-hand side here where I'm looking at the key reversal indicator, and I see that it says that we are at a -3 right now, and it confirms down at the bottom there. And then it says what? The market is mildly oversold. The overall market is measured by the algorithm is nearing levels of oversold. So caution on the short side can be observed as a reversal trend may be nearing. Continue to evaluate short positions, tighten stops, and review your long positions that may be on your watch list. We are starting to see that kind of move lower of the markets right here. And let me give you another example. We start to see, not yet, we're not seeing these clusters form. See these little dots that form? That's back in March, by the way. That gives us some indication that, hey, things are really getting kind of heavy to the wrong side. Look at that nice little move right there, the top, cluster, cluster, cluster. And this is only used as a broad market barometer. The only symbol you can use in here is SPY. The only time frame you could use is daily. That's it. because it keys off of the data that we supply from the SPY and other data underlying it, which also, by the way, you need a couple of things, like you need the Oprah package and you need a few other things. In the instructions, when you get the trial, it'll tell you exactly what data package you need from TradeStation to use this. It's a very inexpensive indicator. It's 25 bucks a month, I think. And it tells us a wealth of information. So where we are right now, back to where we are right now, just to kind of get this clear, we are right now in an oversold situation, not a back up the truck oversold situation, not a, you look an overbought situation, are we right there? Let's get short there. No, over here, maybe. You see all this clusters. So right now is a great turning point on this. I like to see when this gets below 5 to 6. We had one time in history, I think it was one time that there was a -7 intraday, which was really cool. And that was back in March that I saw historically. All right, let's get back to here. No, let's not go there. Let's go here. There we go. Let's go up the list. Some things I'm looking at. Workhorse up 4%. This is an interesting stock. We called this many, many times over the last several weeks. Talked about these beautiful moves to the upside. The aileron that was positive all this time here, right? I don't know what I just did there. Pull that. That looks right. Let's just kind of do a quick refresh of this. But basically, we saw this consolidation. We saw this jump from about the 15 range. Got you in, moved up to about doubled your money there. Now things are a little bit different. No longer do we have the aileron that is, in fact, in an upward slope. Again, the aileron is part of it's an individual charting package you can buy, or a screening package as well. What I have on here right now that you're looking at is the Commander series, which gives you the top line radar screen, which gives you multiple time frames going from weekly, daily. See that on top here? 60, 30, or whatever you can change these up. But right now we have the 30, the 60 minute, the 240 minute, the daily, and the weekly. It shows what's going on. There's been long for 2 weeks on the weekly, but it's been short. This is Workhorse if you look across. It's been short 2 bars, which you can see that right here, right? 2 bars on the daily. Now, the yellow gives us an indication of an alert that says, hey, something's happening, be alert. There is a confirmation on the close of this, and we got an alert that kind of moved you in somewhere about 23.20. Right now trading about that because it's up 4% today. There's a bit of a hole right here, but at the same time, there's some support. You got support right there, right where it stopped, right? You could draw your line and say, hey, where's it going to go? 21.20 is where it closed yesterday or so. Actually, that was the low yesterday. Low yesterday was a little bit lower, sorry. So right there, 21.29 was kind of a level to look at. It held that really nicely, may pop up. Where's the upside right now? You get above 23.60, you got another possible move that goes much higher. How do we know that? What do? We grab a quick box tool. And we can say, hey, you know what? Above this level here, got nothing really to when I look to my left. Always looking left, trying to see what I have as a roadblock for the next move on the upside. So right there, what you have is a really nice move to the upside if it happens. However, one of the things that I'm watching, like I said on the bottom, is that the momentum has turned significantly, and I question if we're going to see a bit more of a consolidation before we get a next move higher. I would keep this on your watch list. I pull this up. There was no way, in my opinion, to really get into this and out of this good, in a really good fashion. One of these stocks, this was up like 5,200%. 5,200%. Went from like $1 or below that to like 40, 46, 47 before it turned back. This is on a 30-minute chart on the right. Honestly, a ridiculous chart. Down 25%. There was some kind of weird announcement that this company, SPI Energy, was going to get into the car business related to batteries or electric or EV power, and the stock went bananas. Low float and low price stocks is at what they're kind of looking for right now. What you could do, by the way, is if you want to look at this, I always keep a page on my a workspace on that. It gives me the movers, which I don't know if you've ever used this, but this is really important to use. These are hot lists. And you can find the hot list by clicking on your apps and going over to H and going to hot list. See that right there? So you can kind of put these hot lists, and you could do things, right? You could change your data settings. There's ways to change. This is percent gainers 1 day. On the bottom is percent losers 1 day. I think hopefully you could see that. I'll kind of highlight that right here. by doing this, right here on the bottom, percent losers one day, and we have percent gainers one day. You can do a lot of things like 2-minute change. There's a whole bunch of things, and it will auto sort constantly so you can know what's going on. Now, what happens is I have a little quick chart, so I can say, okay, well, I want to know what's happening with this stock, and I'm looking at this on a daily basis. Why is this breaking? What's it doing? You can look at the volume, and then you can go do some other research about what's going on with this on different time frames. But this kind of gives me a little glance of what's been popping throughout the day. So make sure to use the hot list. How many you guys use the hot list? I hope. Don't you don't have to answer right now, but something to look at. SPI, though, I want to get back to this for a second here. Was there an alert here? Yeah, you could have possibly got into it. You'd probably have to go back down to like a 3-minute chart and go way back and get this move up because it was so fast. It happened so quickly. I don't know if anybody could have caught it. So what I'm saying this is that you see these kind of things, you're like, oh, I wish I could have gotten that. The probability is you had to be a magician to get some of this. How much would you have gotten? Where would you have gotten out? Let's stick to some of the ones that are not those lucky deals that you can get. Those, oh, wow, that was great that you could talk about at cocktail parties, on the golf course, etc. Nicola, there was some really rough news. We talked about this under 31.25. Starting to be some trouble if it broke. That was last week if it broke down. Where are we now? So right now, let's kind of move our line. Well, actually, let's draw a new line. Let's kind of keep it clean and draw another line. So there's some support down at the bottoms right about here, kind of where we are. That's 18.99, currently trading at 19.54, so that's good. You got this range on that quick drop right here that you could trade. There's not a lot looking left, so there could be a fast zone and a short squeeze if that happens. I would just look at this as a trading vehicle right now. That could be very interesting, but something to take a look at if some of the smoke clears in some of this. EXAS had a big day yesterday. This is Exact Sciences. It was some upgrade. But, again, look at this. This is kind of just a retracement of what we saw, this downstroke from August, from 99 down to 72. And we saw the aileron really call it as well. Aileron's an add-on, by the way, to the Commander Series package. You don't get this with the Commander Series package. You have to add this on. Not everybody wants to use a momentum indicator with this. I like to get multiple confirmations. I like to look up here and say, okay, hey, been short for 5 bars in the weekly. Long alert here's coming. Long alert, long alert. So the bias is now changing, obviously, yesterday. I would not buy into this. The thing is, it stopped dead on. I mean, just dead on. Its upper side, mid-size, point of control, which is this blue line here. Heavy volume mark. We can probably see that if I put it on my radar too. That's another thing. Yep, right there on this market profile, which is a standard market profile. So we got right up to that level right there, and it just stopped dead. Actually, I could probably bring this down right about there. There you go. So this was trading yesterday pretty well, but not impressed with this. We thought this was going to be a short. We do still think this is going to be a short pattern here down to about 244. This has been consolidating for some time right now. We saw this really nice run up, very much like we've seen in August for a lot of these stocks, and then the kind of the move up into its level of resistance there. Kind of couple of resistance points here, clearly above 314. If you are going to think about trading the inside, sometimes you could trade the up to the down, the inside of the range. And when you again just looking at that, it's right here. There's kind of a pretty well-defined range for the upside and downside, and for this thing to vacillate. And we can kind of probably bring this back a little bit further. Looking at the breakout there, and then the kind of leveling off right where it broke to come down. So 244, 245, somewhere around there is probably the target. On the short side for that, XP, I'm not sure why I brought this one in. Maybe somebody asked about it. Skip back to gold real quickly, and then we'll go over your stocks. Gold's in no man's land right now. 171 looks like the target on this. Okay, let's see what we got here. FLDM. This is from Mike. Yeah, FM. This kind of concerns me. This kind of island that we have going on right here. This weird look right there that kind of stares me in the face and says something. Fluid Gem, I think this is being touted by a couple of players out there, if I'm not mistaken. This is on a daily basis. Yeah. I see this as a giant consolidation right now. I'm trying to really get a pin on this. Yeah, this looks like a giant consolidation right now. This is not a stock that I would necessarily trade. I mean, it's got too much stuff going on inside of this range right here. See that? I think that you really want to wait for this to break out above 822. You could have a shot. If you put this on your watch list, I think it could be an important area if it does break up. 825, we'll call it as a number. Downside looks like it's supported about 580. So that's a pretty wide range. And we're talking about, you know, $3 or $2.50 on an $8 stock. I mean, that's, or it's a $7 stock right now. That's a concerning level. That would be pretty significantly. ARCT, someone asked about ARCT holding on by a thread here. Again, what is this now? Arcturus Therapeutics. I guess I would have to say just watch out. You got the momentum rolling over pretty hard on the bottom here on a daily basis. Even on, this is daily. Let's go to 30 minutes over here. Yeah, I mean, the 30 minutes shows a really big stroke down. I mean, this is a pretty ugly chart right here. I would say that probably down at about, it's not great support, to be honest with you, but 33 may have some support. I would watch the momentum on this. But then again, then what happens? If you start getting long again, you got a lot of area to get through. Look at all this area when you look left. And again, I always put these on, but look at all that, you know, blotchiness. I would say if you can get above right there, what is that, 40.99? If it's shot to about 45, that's the best I can say on this from the radar and what it looks like right there. ENTB. ENTB. Am I doing that right? Nope. How about CNR? There we go. Cornerstone Building Brands. $7 stock, so a beautiful move for the upside. You got a bit of a gap down potential right here. Again, I would wait for this to get, you know, above this level, about $8.72, and then it could see another breakout to the upside. Right now, you need to make sure that this holds. That gap was filled pretty well right there. The gap that we saw from about 671 to 835. We're right now in the bottom end of that gap. You know, the support probably down about 658. Better support down about 608 on this one. ARCC. I think there's a couple other ones that are in here. Yeah, I see a couple others. ARCC, again, Aries cap coming down. You got some significant levels of clusters forming on the aileron. This tells me that you could be getting into an exhaustion trade on the downside here. There's really not a lot of good patterns here. Big consolidation. So what happens again once we get beyond that consolidation level, right? Consolidation somewhere in a, I'll just draw it freehand here. Consolidation somewhere in this range right here. You're going to have a tough time getting above that 1550 area. When you do, that's an upside opportunity right now. We had a short that we called here back at about 1450, currently trading about 1327. You got to get and stay below these levels about 1343 for this short to really count. And where do you go from there? Maybe look back a little bit longer. I don't see this chart. It's not talking to me. This chart is not talking to me. I am sorry about that. I got pins, Pinterest. All-time high level, obviously nice break on their earnings, I believe that was. We have the aileron that's all positive here. I mean, so all systems go for Pinterest, right? Right now, up a little bit in pre-market. You got about 38.45 is a decent level of support. I'm loving this 34.99 level of support right here. Again, I turn things, yep, there we go. Confirmation on that, 35 bucks. Yeah, about 35 bucks. I like that support level on there. So if you want to kind of hold off and wait with a partial position as a long position right now that's holding really well, and then you got this level kind of right there. 34.75, $35. Seems to be some good support to kind of bring up some new positioning. PEP is another name. I got two more on here, I think I saw. Holding decent support right here. There's some support down at $129 and change. Again, aileron rolling over pretty hard right now, as is the market into the open right now, by the way. And then finally, did I see another one here? I saw another one here. Yeah, I'm not getting that symbol. I'm sorry. I think that does it for the day. So, hey, thanks for joining me. We'll be here again next Friday. Make sure to go over to TriggerCharts.com. There's a lot of videos. A lot of people have some great questions. Some questions about aileron. No, you should be fine with using the aileron, the autopilot, and the same radar. I don't think that should be a problem. That's all good. So you could run that as well. But remember, you have to keep your intervals on 30 minutes always for all these stocks here. Anybody has any questions, send us an email to support@triggercharts.com and make sure you get the 4-hour free course when you sign up and you are a customer of the Commander Series. We will make sure when you're off trial and you're paying for it, we'll give you a free 4-hour course worth $199. Send in your email to support@triggercharts.com. Hey, thanks for joining us, and we'll see you again next Friday.